Greetings, fellow investors. It's been a while since I've done a total stock market, total review portfolio video, so I wanted to be transparent here, wanted to share my holdings with you guys, and I'm always open to hearing constructive feedback in the comments below if you think I should be buying more of a stock, or if I should be selling out of a stock, or if you want me to take a look at a stock that you really like, let me know in the comments below. If you're new here, I only started this portfolio about 2.5 years ago. I started at $0 and I just kept investing every single week, throwing in a few $100s to get to where I am now. And I have no signs of slowing down. My capital gains, or my unrealized capital gains that is, are doing great. My dividends that I keep sharing with you guys every month, I make videos on them, and you guys can see that they continuously get bigger and bigger every month. So I want to continue this transparency with you guys. I feel like I'm getting more and more knowledgeable about investing as every day goes on. And wealth, it's not built overnight, guys. It's built over many, many nights. And there's many times where I thought the portfolio wasn't growing at all. And then I looked back and I realized how much it's really been growing. So since I do own over 50 stocks / ETFs, yes, I probably am a little bit too diversified, and I won't have time to be giving analysis of every single company. This is more to just share what I'm currently owning. If you do want me to go a little bit more in depth on a certain stock, just let me know in the comments and I can dedicate a whole video for it. As always, guys, these videos, they take me a lot of time to edit and research and put together. I'm not trying to sell you guys an expensive course. All I ask for you guys, if you want to support me, is that you hit that like button. That allows my videos to do better in YouTube's algorithm and be seen by more people and help the channel grow. It also helps me able to gauge what videos you guys want to see more of. I never really know if the content that I put out is what you guys actually want to see. So let me know by hitting that like button and subscribing. So I don't want this video to run too long, so let's get started here. So we can see here in the past month, I'm up almost 17%, almost a $7,000 gain. Of course, all that is unrealized until I actually sell it. None of that is really actually money, but I have no plans on selling. I practice a buy and hold strategy. So 17% for me in the past year versus the S&P 500, which is the 500 largest companies in the world, is doing about 15.7% in the last year. So I'm doing slightly better than the S&P 500. I also have a higher dividend yield, plus I don't have to pay that small little minuscule fee that you would have to pay if you invested in an ETF like Vanguard's VOO. So let's get into the actual holdings here. So first position is Intel, which recently had a huge sell-off, as you can see here in this little chart that's heading down a cliff, literally a cliff here. So it went from 61 to the early 50s. So that was quite the sell-off, and that was because Intel had to delay one of its products that investors and companies were eagerly awaiting for, and that caused the stock to really have a huge sell-off. So I do think that was a little bit of an overreaction. Still think Intel will continue to put out great products. One of the largest semiconductors in companies in the world, going to continue to be doing that for the foreseeable future. It didn't cancel its plans, it just delayed them by about a year. So once they release that, I don't anticipate any future problems for Intel, and they have been reliably doing well over the last couple decades. Pay out a very small dividend, PE ratio not too high. So I remain bullish on Intel for the time being here. So as we continue to move on, we get a gigantic company in Microsoft, a $1.6 trillion market cap, guys. So if we look here in the last 5 years, Microsoft has almost 400% total return in capital gains there, and then also pays out a little bit of a dividend, which it actually just recently increased. So always nice to see there. So Microsoft under cloud services, which is second only to Amazon Web Services, the company will continue to be able to generate growth that way. Of course, they also have their Office products, which I use every single day at my work. Could not imagine doing my job without that. So getting an increasing dividend while we wait, as we continue to use Microsoft products in our everyday lives, constantly paying that monthly fee to have the licenses to use their great products. That sounds like a good bet for me. So I have 11 shares of almost $900 return on Microsoft, so 62%. It makes up 5% of my portfolio here. As we continue along here, I have one of my more newer additions to the portfolio, and that is Tesla. So I bought Tesla a little bit before they announced their stock split. So I got that, and then the stock continued to rise as soon as they announced that little stock split here. So should have gotten in around August 12th, and then it just kept climbing until it had its actual stock split on August 31st. So now I own 5 shares, market value of $2,200. It's actually quickly became one of my largest positions in this portfolio, and a lot of that is just from its quick capital appreciation, not necessarily from me buying any more shares. I didn't think I'd have to mention this part, but I actually did drive in a Tesla car. It actually went down mountains with somebody actually controlling the car. It wasn't just moving because of gravity. Also, I can actually say that Tesla cars actually drive. They don't just go in so-called motion. I'm putting this in huge quotes here. Plus, its CEO, Elon Musk, is is basically a genius. Love hearing him talk about his company. And then they also had their battery day, which I think fell a little bit short of people's expectations. And I largely think that's just because people have been putting such large expectations on what this battery day would include. I mean, they announced a $25,000 electric car that has the potential to be autonomous. Like, that's something I would definitely be interested in next time I'm considering buying a car. Only expect more and more great things out of Tesla as they continue to ramp up their factories, which will continue to mass produce Tesla cars. And I really do think the demand is there as we continue to transition from gas powered cars to more electric. So Tesla has more SEC investigations, more based on what Elon Musk is tweeting rather than actually problems with deception or fraud with their actual products or cars. So Elon Musk could definitely sell me a car and I would buy it. Trevor Milton, on the other hand, I'm not so sure if I would buy a fake car from him.
Peter, this car has dents in it, and it's got a cardboard steering wheel.
Yeah, just a second, honey.
And look, there's no engine. It just has a drawing of an engine.
But it only had one previous owner. James Bond. I'll take it. Okay, let's see what this baby can do,
All right, so we continue here. MasterCard, I own 6 shares of this, also worth $2,000 in market value, makes up 4.46% of my portfolio, and has a 24% return. So glad to see this stock continue to rebound here as we continue to do more business transactions, swiper cards, MasterCard getting a little bit of revenue there. So Shell here, I actually just made a video about this on why I bought a few more shares, just taking more of a high risk, high reward. Potentially, I think I'm hoping that oil has reached its bottom and will only go up from here, but could be dead wrong and it could continue to go down. So this has been one of my worst positions, down 46%. A bit of a double whammy here with the oil industry in 2020. Not only were they playing games with different countries and different agreements being broken, but then we also had the C-19, which just totally decreased travel. So that has obviously hit companies in the oil industry like Shell. And it's reflected here in the share price, but still paying a solid dividend. It's closer to 5%, not accurate here on Robinhood, but that's even with their dividend cut, which is actually super insane to even think about. Then we got JP Morgan, another company that I bought more into here. So Chase Bank is actually planning on raising $700 million. This is speculated rumor here to target residential real estate across states in the Sun Belt. So that includes Atlanta, Georgia, Austin, Texas, Charlotte, North Carolina, Houston, Texas, all great places with growing population. And those are all on the Sun Belt. Seems like a great investing strategy for those who want to get in. And they are actually prohibited from the Federal Reserve from doing any sort of share repurchases for the rest of the year. And I think that's great news. JP Morgan Chase doesn't need to be focused on doing that. It needs to be retaining that capital and paying me great dividends, which its yield is almost 4%. Still down on this position, but we'll continue to dollar cost average in. Then we have Apple here. Not much to say. 33 shares after its most recent stock split. Largest position in the portfolio and up almost $2,000 on this. One that I'm just going to continue to buy, stash, collect cash. No babysitting involved with that one. Then we move on to NVIDIA. So I'm really, really bullish about this company. It's been a total rocket ship these last couple of years. And I'm so bullish on this company for its industry top-notch graphics card. They just actually announced a partnership with VMware to continue working on artificial intelligence. It's also huge in the data center space as well. And now there's speculation that NVIDIA's $40 billion ARM acquisition that they were in talks with will actually be blocked because of fears that it could lay off its United Kingdom employees. So the decision lies within the hands of the UK government or the Competition and Markets Authority, which regulates competition over across the pond. So NVIDIA, one of my favorite stocks here, makes up 6.3% of my portfolio. I have almost a 70% return, continuously continued to dollar cost average and buying a little small chunks of NVIDIA now that Robinhood has fractional shares. Then we got Medical Properties Trust, just bought more of this in the last week here. So 1818 still actually just went back up on this position. So an average cost of 1761 for my 51 shares and have a total return of just 3%. But I have been consistently getting its high dividends here. If we go to how many dividends, you can see here since 2018, spring 2018, they have been growing me in dividend income. So we'll just continue to hold them. Got that $12 dividend also pending here on October 8th, $12.60. So going to continue on here with the portfolio. Visa 203, 9 shares, recently bought into them as well. Total return of 18.29%. Visa, one of my more favorite companies. Adobe here, guys. I got really excited because I bought only $100 of equity. And when I saw this for the first time, I thought that I now had $500 total. But then I remembered I only had a fractional share. So $105 only market value. I recently just got into this position. I will talk more about this stock in an upcoming video I'm doing. So be on the lookout for that. Won't talk about Adobe too much here. Then we got QQQ. This is the Power Shares Technology ETF here. So market cap weighted on the 100 NASDAQ listed stocks here. So great returns in the last 5 years, 175%. This has great companies like Amazon, Tesla, Nvidia, Adobe. So a lot of companies that I would normally just buy anyway, but can now get in at just $282. You can get a little bit of ownership in all those companies. So we'll eventually have, my goal is to eventually have 100 shares of this one day and be able to do options on that. But obviously that's a very long-term goal. Only have 1.3 shares right now. So as we continue here, we have 3M continuing to go down here, unfortunately. Maybe it's fortunate, right? Then I can get in at a lower average cost here. So my average cost is 171 for the 7.06 shares that I own. So still down on this position, but not as down as I used to be. Glad to see them recovering just a little bit here. So, and then you can see all my dividends that I've received from them in the past here. Then we have Duke, which has actually been in the news recently. Duke is actually the largest regulated utility in the US. It's trying to be acquired by NextEra Energy. Recently just talked about both of these companies, so that's pretty insane here. So this would combine the electric and gas companies into a juggernaut of a company, and they're actually doing most of their business on the East Coast. I would actually be very surprised if this deal actually went through and got approved. I feel like this company would be just way too powerful if Duke Energy and NextEra got together. So hey, this has done great wonders for the stock price here. You can definitely tell when the news broke here, right? On this trading day, it was for a utility company to spike that much in a week. You definitely know that there's some business going on there. So hey, that did really good for my total returns here, up now 12%. And of course, they pay their fantastic dividend yield, just under 5% right now. Okay, moving on here, we have Amazon. Been recently trying to buy more growth companies. Some of these growth companies, obviously, they're more focused on continuing to grow the business, not necessarily paying out dividends. So one of those companies is Amazon. Back to now having over $100 in return. Last time I think we looked at this company, I was just barely break even, and that's because even though Amazon has just been doing amazing here, I am relatively late to the party, trying to get my position in Amazon more bolstered here, but my average cost is $2,900 because I've only recently started buying in. So Amazon, actually with Amazon Prime, it now has over 150 million paying subscribers. That's producing $6 billion in revenues for Q2. Amazon Web Services continues to dominate, growing 30% year over year. Its cash flows continue to increase as well, and Amazon will continue to focus on growing in sectors or whatever sectors that they can disrupt next. I think groceries is what they definitely have on their to-do list. They already own Whole Foods, and how are they going to continue to disrupt that sector? Then we have Honeywell, which recently announced a dividend increase, planning on buying more of this company as well, diversified technology company. They make a lot of products like thermostats and fire alarm systems, as well as fans. Basically a lot of stuff you see just around the house and you might not even realize it. So up almost $160 on this stock, 19%. Not too bad in the short time I've had them. DHT, so a lot of people leave the comment that they love all the stocks that I own except for DHT, which, hey, you guys got to give some love to DHT. I am down 35% on them, but they have been paying out absolutely ridiculous dividend recently. So as long as I continue to get those fat dividends, I will eventually break back even on this company, but not one that I'm actively looking to buy more of. And we'll just continue to let them float, like literally float. All right, then we got QILD. This is one I will continue to be buying into, close to my 100 shares goal here. And this now is only 3% of my portfolio. Do have a small return in terms of capital appreciation, but where the true beauty of this ETF, this covered calls ETF, is in the dividends. So you guys can see it's been growing every single month. Pretty fat dividends here. So this most recent one that I just got on September 30th for 62 shares is 21.1 cents a share, and that comes out to $13.18. So that's not too bad for a ETF that only costs $21 here. All right, moving on. Store, which also just recently announced a small dividend hike, has been on quite the discount this past year, obviously with it being a real estate investment trust that specializes more in commercial properties. That's obviously been affected by the C-19. So I was able to get it at some good prices. I bought a good amount of shares back when it was in around the $14 range. So my average cost is $25, and I am up almost 12% on this position. And as you guys can see here, we'll be collecting my dividend on the 15th for $9. As we continue to go on into the portfolio here, we see Prudential. Prudential has an out-of-this-world dividend yield of 6.82%. For a company that's run really well, like Prudential Financial, they have that cash flow to continue to pay out that dividend from its strong operations. And they also have a pretty strong balance sheet of over $400 billion in bonds. So a company like Prudential offers life insurance, annuities, mutual funds, retirement, investment options. Prudential, can't see these guys going anywhere here, so I was able to buy at some of the best points here. I think my first tranche here was back when it was around $40. And now my shares are just dripping into buying more shares every time they pay out a dividend here. So pay out $1.10. So going to continue to hold Prudential here. Really is a nice dividend cash cow. Then we go on to Applied Materials, which actually has had a year-over-year increase in revenues over 23% during this pandemic. Relatively low PE ratio. And its semiconductor systems division is going to be in hot demand as more 5G smartphones become more and more popular. So as you guys may or may not know, this is a company that basically provides the materials for a lot of these semiconductor companies to be able to make the products that they make. If you guys want more in-depth on this company, I have made a video in the past about it, so be sure to check that out if you have questions. Then we have one of my favorite companies as well as Equinix, now trading close to $800. My average cost is $505, which means I've made a $525 total return. I'm always wondering why I don't just buy more and more of this company if they just continue to do well. I definitely will get around to it at some point. This is a data center REIT, for those of you that don't know. Then we continue on here. We have United Health at $313, which actually, if you had told me this about maybe 18 months ago, I think I would have told you you were crazy for thinking the share price would be this high, because there's so much speculation that if Biden was leading in the polls, that the UNH stock price would absolutely tank. But I think people have finally just come to accept that UNH probably won't be affected too much, regardless of who is going to be taking the office in a couple months here. So up almost $300 on this position. Great company. Will continue to hold for the long run. Probably one of the more underrated companies in the stock market for how great they are. General Mills recently raised its dividend for the first time in a couple of years. Hold 2 cents, but hey, 2 cents is better than nothing. So definitely take that. And General Mills has done very well during this pandemic we've been having, and it's up 28% for me. As we continue going down the list here, Bank of America up to 34 shares, market value just under $1,000, and still down on this position, but this is one that fluctuates, basically trading sideways, just like JP Morgan Chase. So some days I might be up, some days I might be down. All right, then if we continue moving on, we have the ETF, SPHD, supposedly high dividend, low volatility, really just holding on to it at this point for sentimental value, pays out a monthly dividend. For me, it's been around 90 cents, so we can see here if we go to dividends, once it has that little scrolly bar, that's how you know you've had this in your portfolio for a long time. So you can see every single month I've been invested, it has paid me a dividend. Not too big of one, but we'll just continue to hold it, get paid from it. So buy, stash, collect cash. Then we have Ebby down in the last month, almost 9% here. Last 3 months down 12.2%. So I am now back to being down on this position. Only makes up 1% of my portfolio. But of course, everyone buys this for the nice, big, juicy dividend that they pay out. And hopefully we'll be able to continue to pay out even once it loses patent protection of its most profitable drug. Then we move on to Pfizer here, another pharmaceuticals company. Pretty stagnant with this company, basically almost breaking even here. This is one that doesn't really move much. Honestly, if there's a couple positions that I was thinking of selling, I think Pfizer would be top of that list. But hey, just trying to get more diversified in different industries. So we'll probably just continue to hold on to Pfizer. Then we have Johnson & Johnson, another old reliable stock here. Last year, it's up 10%. For me, my average cost is $132, and I'm up $73. This only makes up less than 2% of my portfolio. So maybe I just do want to get this to become a larger position in my portfolio. Just get that basically guaranteed dividend every quarter, and confident that they will be around for the foreseeable future. Have a just under $400 billion in market cap. And a lot of people are speculating that they might potentially have the C-19 vaccine ready first. Medtronic here, this is a medical equipment company, $102. Back to being just about even with my average cost being $101.16. Obviously, with people not visiting hospitals as much, that kind of lowers the demand for medical equipment, but at the same time, they won't be able to defer that forever. People will eventually need to go in. Medtronic makes a lot of medical devices, such as pacemakers, medical devices for the heart, all sorts of things. I'm not a doctor. I'm not going to get into it, but very important company. Pepsi, nice consumer staples company. Been thinking about getting more into it. I am up about 16% on this position. That's not including the dividends, which is another big reason why I hold on to them. And they're just so reliable too. Consumer staples always come in clutch here. McDonald's was just absolutely been booming here in the last couple months. It's really recovered from its lows here. It was at one point, it was in the 130s. So to see it recover so well here, was able to nibble on some shares, get my average cost down to 191. So I'm back up on this position. Starbucks, how about it for Starbucks? They raised their dividend 10%. And I know if you guys got a 10% raise at your work, you guys would be jumping for joy. So really excited for my Starbucks shares, 13 shares, and up $137. So let's try to go a little bit faster here, guys. So Costco, not sure why I'm telling you guys this, but there is a Costco opening up near where I live. There's a lot of positive sentiment, and a lot of people are excited. I'm not really sure how that's going to impact Costco, like the stock, if a store is opening up next to me, but I can guarantee I probably will shop there a couple times. So just letting you guys know that. And then maybe one day I will buy more than just one share of Costco. Then we got Coca-Cola at $49.12, up on this position, $65 total return. Probably will continue to dollar cost average my way into Coca-Cola. NRZ, one of the best stocks out there on the market. Well, at least it was at one point when it was yielding like a 12% return with its dividend. Right now, paying out 10 cents for every share. Cut it from its original, at the time that I bought it was 50 cents per share, so that was pretty crazy, but looks like they're surviving and doing well still. Then we got Realty, not reality income, at $62.28. I'm up $75 on this position, or $76, and this is a monthly paying dividend ETF. Owns a lot of commercial real estate that companies do business on, drugstores, gas stations, movie theaters, gyms, you name it. And it's really cool because it pays out dividends. But now that I have it on a DRIP dividend reinvestment program, it's basically buying more of itself every single month, which means my dividends are only growing bigger and bigger each month as well. They also raised their dividend like a fraction of a penny, which some people are super excited about. Because I guess if you do own a lot of shares of getting that fraction of a penny increase, that actually will make quite the big difference for you. All right, guys, then we got Waste Management here. I am up on this position as well. Average cost of 105 compared to 112. Going to try and move a little bit quicker here. Procter & Gamble, this is one that I always kick myself for not buying more of. My average cost on this is pretty good, but I know it could be better if I had just continued to buy more shares, and my total return would be a lot higher. But again, consumer staples. Really never noticed how many Procter & Gamble products I just have around the house. It's pretty insane. Then we got Boeing. A lot of more recent YouTubers who may not have posted a video in years and then have recently came back and are doing nothing but options trading on Boeing, but that's not for me. Just hold my 2 shares. Always reminiscing about the time when I should have sold it around the 440 mark. And I still remember those times, and I thought Boeing was such a great company. And then, of course, it literally came, unfortunately, crashing down. So $384 in total loss. Not every stock that I own is unfortunately does well, but that's why I'm so diversified. Just hope that most of my companies do well, and that will cancel out the ones that do bad. And then we got Verizon, also recently announced a super small dividend increase. Up a little bit on this position, and of course just been getting paid my dividends throughout each quarter. And then we have its fellow competitor here in the sin stock, AT&T, which does in fact own CNN, which recently just had, along with basically every other media company, had the presidential debates on. And the presidential debates, my opinion, was that they were super civilized. They definitely took turns. They respected each other. And I'm sure people who were watching totally changed their viewpoints and opinions from watching these guys talk for an hour and a half. As well as the people who did their makeup, man, all I gotta say is those people deserve a total raise for doing their makeup. So 15 shares here, and I'm down $63. A lot of people just buying this now for their dividend. Their DirecTV acquisition a couple of years ago looks questionable at best right now. So just going to continue to hold on to them, and we'll see what happens. Then we got ExxonMobil, $33.13, one of my bad positions here in terms of total return, much like Shell, down in total return. Southern, just another staple dividend company here, close to a 5% yield. We'll just continue to buy, stash, collect cash from Southern Utility Company. Disney, another interesting company here. They laid off recently 28,000 workers, mostly at its theme parks. So Disneyland in California still not getting the green light to operate because of Gavin Newsom. Whoops, his last name is actually Newsom. So the theme park segment is down 85% year over year. I think you can all understand why. This is not Disney's fault. That's all directly related to the C-19, as well as the insane amount of red tape that is preventing Disney from reopening. So while this has been really tough for them, what has been growing though is their Disney Plus services, their streaming capabilities. ESPN Plus is also streaming. Now they have over 100 million subscribers for these services. So think about the monthly payments they're getting for having these streaming services. I personally have been watching a lot of Disney. They have the whole Simpsons series on there, so I've been rewatching a lot of the early seasons back when it was actually good. It brings back a lot of nostalgia and good memories from there. So they also have the NBA bubble, which is finally going to come to an end. It's being held at Disney World. It looks like the Lakers are going to absolutely destroy the Heat, so that will finally come to a close. As we continue going here, we got Union Pacific, and this is basically a railroad monopoly, just like in the game Monopoly. And I love monopolies. As the demand for their products continue to surge, there's going to be need for products to be transported across the country, and that's why I'm going to continue to buy and hold. Railroad revenue tends to correlate with the growth of the industrial economy, and that tends to go up over periods of times as well. They also have a very safe dividend here, just around 2%, so nothing too crazy there. It's a pretty safe dividend, as we will continue to need ways to transport goods and services. Can't really see UNP failing. A little under $1,000 in market value and $200 in total return. All right, and then we will end the portfolio on a low note here, and that would be Chubb. 3 shares, and I am down almost $100 on them. So at least I'm getting a whole $2.34 in dividends, guys. That's always nice. So doesn't make up for the loss. Chubb, an insurance company here, been hit pretty hard during the pandemic. So that's going to be it for the portfolio, guys. I want to know what you guys think about my positions. Lately been adding a bit more growth stocks and less dividend focused as I was earlier in my investing career. So still beating the market, still doing great. Portfolio continuing to rise here. So I want to know what stocks you guys think I should continue to add. If there's any that I don't own that I definitely should have my hands on. I'm always open to learning more, interacting with you guys in the comments. Be sure to subscribe to the channel. And wow, if you guys stuck with me all the way through the end, be sure to let me know in the comments by saying the phrase that I love to say on this channel. So I will catch you guys next time.